really straightforward. Um, is I'll still analyze the weekly candle just as I did for the past way, and just as I would for any case. The weekly candle's formed the way however it is on any person's perspective. It's either opened here, got a high here, closed here, and got a low there. It's like if you're in fucking India or wherever, it's closed the same way. So it's like it's universal. Anyway, I'll assess, okay, where the weekly candles I need to push to. I had already marked this up, remember? And I said 750 or something like that. Um, and I'm also kind of just visualizing it. Yeah, about 750. So then what I then do is go through my looms and determine the drop down date relative to the day that more than one out of the 2 and 3, 4 day bar closes in the given week. So it's not around the economic calendar. I don't give a shit about the economic calendar. It's way more valuable to utilize the loom time frames. Now anyway, so obviously we're operating within the 30th week. So then what we're doing is we're basically seeing which bar closes after the 30th within this current week. So this is before. So you've got a bar close on this Tuesday. What about the 3 day? Thursday, you've got a Monday. You've also got the Monday here, but then you've also got the Wednesday. Um, so this is where a bit of like discretionary thing, like discretionary. Aha, hang on a sec. So you got the 3 day and 2 day here on this day, but then on the 4 day, you've got Wednesday, and then obviously the 2 day two on the Wednesday, because the 4 day and 2 day, or like whenever a 4 day bar closes, you've got a 2 day bar close. So this is a good day to look at. This is a good week, sorry, to look at. So um obviously and if you can drop down on the Monday, you know, um you've also therefore got the weekly in your favor too, because the weekly closes on the bloody Monday. So therefore, I'm not gonna lie, it would be the Monday that you're looking to drop down on, right? And I haven't even done this in advance, so this is really good. This is like live, basically. So anyway, you've got the 3 day. I would look at this through the lens of the consecutive bar push and play, of how this bar closed, like in terms of like, because you've got the weekly as your loom, because that's the highest time frame providing direction. There's slight opposing sign I wouldn't put much weight on based on the 3 day and weekly. I'd then obviously go to the daily, and same sort of thing, but like I would see that there is some sort of wick rejection here, so maybe you might need to see the market set up appropriately, but who knows? We'll end up finding out. The 12 hour looks good, to be honest, to just continue lower, but then it does also have some sort of a slight wick rejection. You could maybe expect this high to be took, or at least pushed to 97,400. Why 97,400? Because that's like relative to this 12-hour time period, that makes sense where that next bar could easily push to, based on how it reacted from the lows, and it's just likely to have at least momentum, at least up to here. Then anyway, then just go straight to the 4 hour. And you might be wondering, well, actually, no, I'll shut up and I'll just keep going. So then on the Monday, you're dropping down as of 6. Um, like aka the most recent bar close prior to 7, so therefore it's 6. And you see you've got a very strong bar close, right, closing right at its lows. And also just kind of ignoring this, because this like up close opposing bar relative to this down close push formed right after a pretty decent strong close to the downside, after this bar push to the upside started to wick reject, and then you got this, and then this immediately comes after. It's like, probably want to wait for the next bar close. Anyway, this bar closes like this, also under the circumstances of all the other time frames. Then anyway, you drop to the 2 hour, and then you basically see whether that's backed up. What do you know? This is brilliant. It closes a sufficient anatomic bar close. Honestly, you could probably just go in and sell right here, but I would still want to look at how the 1 hour closed. Because if the 1 hour, because obviously the 1 hour close closes as of 7, so that provides you a bit more of a better insight. And it's like, if, for example, this bar close happened to, so I'll just emulate real time. What I mean by that is like looking at the market as if it was real time, because you wouldn't have anything else. Anyway, if this bar close formed like and closed bearish, like right here, and had this wick rejection, yes, as of 6, it's likely to just sell off. But this is more recent action in terms of how they're willing to interact with where the market's at here. So it's like, You might want to wait for just a slight bit of better pricing using your experience. Maybe you could just enter at the FVJ fill, but in this case, it's not really. It's just the same context as the 4 hour. It's like a little iffy bar opposing bar close after a strong push to the downside. So what I would then do is I'd go back to the 2 hour, and this is where I'd be looking to trade. That this is where I'd be forecasting the dollar basically to push from. Like, oh no, execute. No, fuck. How am I? I'm not describing this very well. Um, this is basically the time frame which I would be like confident enough of to execute the idea of how I anticipate the market to probably move like from this point. So what do I then do? I mark up the high at hand, which is here, and I see what a pip or whatever this is. It's like points, I'm pretty sure. But you get the gist of how much that is, and I'd basically look to provide a good amount where like kind of like I'd first mark up a good amount and then see what this number is here. Like in terms of like whole digits. So like you've got like obviously the 25 and 30, and I would say a good distance to cover would be about this much. Now where's that coming in at? It's coming in around closer to 30 than 25, right? So I'd have a look at 30, and then that's also coming in with this kind of like support zone here. So I'm just purely experienced at this point. Now, what do I do here? Because you don't have DXY on most prop firms, so what good is this? Now, this is where the good stuff comes in. So you're looking to sell a price as of 6, as of 7. So what I mean by this is obviously as of 7, the market might not be trading at where the market was at as of 6. But in this case, it is. It's actually a little bit better. But you just want to price the same as 6 or better, basically. So if this 7 a.m. bar close up here and wick rejected, sell because that's a better price or the same as 6. This is fucking mint, by the way. Anyway, and obviously it's a fixed 1.5 R trade, and also you're risking 2%, and also you're trading the stronger or weaker pair. In this case, you'd be looking for the stronger pair because DXY is poised to sell out of the Australian dollar NZD and the euro dollar, the euro and or the pound. Now, basically, what euro GBP? If euro GBP is fallen, well, that means people are selling euros for pounds. What I mean by this is if so basically, right? If the market, let's just go like here. So some days when you're looking at like euro, like for example, today is a pristine example. Right, when I was in the trade and I got smoked this morning, um, you can see that if you look at this, wait, are you? Wait, yeah, you're still in. You just listen. So like, um, anyway, so like if you look here, when I was in this trade, if you look at how dull, let's just say the activity was in the euro compared to the pound. Now look at this. So this was here. This had a lot more oomph in it. Why is
Hmm.
that? If you go to Euro GBP, what's going on? People are selling the euro, so that's the weaker pair out of the euro and pound. Why didn't I then go into the pound and execute? Because the standard strategy, which is different to this, is different. Anyway,
Yep.
if people are selling the euro at this price, for example, that you see at the corner of my screen, they are willing to sell a standardized quantity of euros for the amount of pounds that each euro can be exchanged for in pounds at this rate. Because obviously Euro GBP, you've got the base currency, which is your first instrument, so of the pair, which is the euro, and then you've got your quote, which is what you like 1 euro is worth in pounds. So therefore, like in short, all you need to know is if people are selling the euro, people are selling the euro at £4. They're in essence buying pounds. If people are buying the euro GBP, well, then they're buying euros £4. They're exchanging the euros for pounds. Of course, that's contingent upon the direction, but like here, this like higher, people are buying euros for pounds, getting rid of the pounds for the rate of what they're of how much euros
And
of how much it cost them in pounds to buy euros at this price. So at this price here, 0.86
yep. And
0.8041, they could buy a standard
uh,
amount of euros at that pound at the amount of pounds it cost them per each euro in the standardized contract quantity. Yeah, what were you gonna
are
say?
they? I was gonna say, are they buying pounds to because DXY is weaker?
No,
So
it's just a separate market. I'm just utilizing Euro GBP and you'll see after. Australian dollar NZD um, to
Okay,
determine
okay.
stronger or weaker pair. So, for example, like in here, because obviously obviously would be we're going to be looking at the two. So we've got our time frame of what we literally do everything on the dollar for the second thing, and we simply look to execute our dollar thesis or analysis on the stronger or weaker pair contingent upon the direction dollar's poised to move in this case to the downside, on either on in this case on the stronger pair out of Australian dollar and out of the Australian dollar NZD and out of the euro and pound. So how I do this is obviously we're looking at trading within on the Monday. So what I'll then be doing is I'll then go to the Euro GBP as of the most recent bar close prior to Friday to determine what sort of interaction is. You see what I mean? This is just I'm so happy I've got this on record. So look at this. You kind of you basically only using the Euro GBP and the Australian dollar NZD daily chart to determine how over the course of that next day that you're looking to operate within, the market is poised to push in like. And so if Euro in this case, if Euro GBP is poised to push to the upside, well then what does that mean? People are poised to buy euros for the amount it costs them in pounds to buy that amount of euros. What I mean by that is every single contract it's a standardized quantity of euro. So it's a standardized quantity of the base currency. So, like, for example, euro dollar, the standardized contract quantity amount, if you've got one contract on the offer, right, that minimum contract is worth 125,000 euros, meaning someone is willing to sell 125,000 euros at that price. For the amount of dollars in this case, they can sell their euros at that price for in the quoted amount. So like here, for example, don't worry, I won't digress much, but like here, if I just go to the 6E because that's like the real market, that's more more. Oh, for fuck's sake, hang on, Jesus. Anyway, have I deleted some pairs here? I've got rid of euro and pound. Where? What the hell? Anyway, whatever. I don't know how the fuck that's happened, but maybe I. Fucking hell, hang on, mate.
It's all good.
So the dollar, the bonds, the dollar, Australian dollar, NZD, NZD, USD, odd. So we need the euro back. Oh, yeah, right. I'll just do this. Right, one sec. Okay, so basically, if right on the offer right now, because it's more visible on the 1 minute chart, because this is like book map. There's not even charts. It's like just a continuous prevailing market. What the hell? There must have been some news on this day. Um, wait, that's today. Anyway, so let's just say right. Hang on. Right. So obviously this is the last traded price at that point in time that we were just in. Obviously, that's changing as traders interact with whatever's available to pair up with at and trade, because that's what the last traded price shows. Anyway, it's literally in the name. And
Yeah.
so if this last transaction took place on the offer, and there was one contract here, and someone was willing to buy that contract. First of all, the guy in the offer was willing to sell 125,000 euros in exchange for this amount of like no. So they were willing to sell 125,000 euros for the amount of dollars that each euro could be exchanged for dollars at this rate. So basically, like, they were willing to sell. It's loading. Why is everything taking so slow? Yo, okay, there we go. So they were willing to sell 125,000 euros, aka exchange them for this amount of dollars. So at this price,
Wait,
125,000 euros
where'd you
could
get
be sold.
125,000 from?
I'll show you. I may as well. It's just what one contract holds the underlying significance of. So like gold is like 100 ounces, and then obviously the price is quoted in ounce. So therefore, one contract of gold is like the equivalent of like, for example, whatever 100,000 times the price is, because that's what 1 ounce is. And so therefore, if one contract is uh like 100 ounces worth of gold at whatever price that is, well then that's how much that contract is worth. So like, but like for euro, you'll see, which is the real market, bear in mind to Euro FX. Yeah. So there we go. See that? So like one contract, when you're looking at the best bid best offer, and you've got the contract placed in the best bid and offer, each contract is worth 125,000 euros. So therefore, if there's like 10 contracts are placed on the bid, well then there's 1.25 million worth of euro. No, yeah, at the on the bid. But basically, right, the reason why I'm just showing you this is because like I kind of actually forgot why I was even going on about this, but like oh
Price?
yes, yes, I remember. It was because I was telling you, like, if people are willing to, like, if people are selling, I'll just get to the point with this thing. So I'll get back the Euro USD. I don't know how
Yeah.
it went, but
We've got 10 minutes, 9
yeah,
minutes
yeah,
in
don't
this,
worry.
so
I'll be able to get through it in that period of time. GBP, GBP USD. I don't know how the hell I deleted them. And I like it structured too. So there we go. Right. So. Obviously, we've established that we're looking to literally execute our dollar analysis on the stronger in this case because dollar's poised to fall, right? And obviously, this is also relative. This is all relative to the loom and stuff. Wait, so this was the this yeah. See, so this was the original thing that I was trading. And I mean, of course, it's just one instance. It could have worked. But this was what I'm showing you here. And so basically, right here, we needed to buy the dollar. We would therefore be looking to sell the euro or the euro USD or the pound dollar and the Australian dollar and the NZD dollar. And which one out of the euro or etc. do we look to sell the weaker asset? So what we do is we go on to the daily and we determine how over the course of that next given day relative to Euro GBP and Australian dollar NZD, the market's likely to move in. Anyway, we established here it's likely to push to the upside over the course of this next Monday, right? Which is the day that we're looking to operate within. Now, what does this mean? People are likely to buy euros £4. Now, okay, so we're looking to buy the euro. Now, we do the same for the Australian dollar NZD. I mean, look, this is why these pairs chop around a lot too. Because it's like, you've got large it's weird. It's like they're all connected to some degrees. Anyway, so we're looking at as of the Friday, and this is actually like for this week. So and bear in mind too, we're not stuck like we don't it's not like it's not rigid. Like you're not stuck with just looking at the dollar. I mean the daily. The reason why I say that is because sometimes it might not be clear. But anyway, in this case it is clear that this market is likely to move higher. What does that mean if it's Australian dollar NZD? People are likely to buy Australian dollars, right? So therefore they're likely to buy Aussie for the NZD, right? So therefore, what you're looking to do, you're looking to execute your analysis on the Australian dollar and the euro dollar. Now, I am looking to trade these two in this because it's like one system. This I am looking to execute this on, and obviously we're going to the 2 hour, and we literally just execute when we would be executing on the dollar, right? But I am looking to trade this same thing on one account, and I've got a mate. who is trading this same thing, and he's absolutely killing it. And I grew up with this guy, and like, I mean,
Damn.
I've got a photo of when we were in like the first year of school and stuff, and we've always stayed in contact, you know. So like, and I mean, he recently got funded his first 50K trading this way. But he just focuses on the euro and pound and euro GBP, etc., and the dollar and the bonds and stuff. But like I got creative last night and I was thinking, hang on a sec, you could do the same fucking thing using the Australian dollar and NZD based on the fact that you've got a pair Australian dollar NZD. Anyway, so let's see what would happen. So obviously we're going on the Monday and we're looking to execute as of the price of six. Now you can see what happens. See, and then your stop loss is all the same too. You're basically executing your, like I said, you're basically executing your dollar analysis on the euro. So you mark up the lower hand, and then you just look for an appropriate amount to give. It's probably about this. That comes in at like the same amount. But then, you know, you're also utilizing your experience to some degree too. So it's like if like you are getting like, I mean, this is just beautiful. And then obviously I mean, it's probably I haven't actually looked on the Australian dollar, but obviously we will find out very soon. Um, but like if your experience is telling you like you shouldn't have your stop here, well then don't. Like don't have it there. Like listen to your experience. But in my opinion, so I would mark up 25 pips, and that's too small. I would then go to 30. Uh, I would probably go about there. You might be thinking, well, that's pretty precise. To be honest, I'd probably just go 30, yeah. And then, yeah, so there we go. There's the trade. And then obviously we'd be looking at Australian dollar because that was the pair that was poised to rise over the course of the given day. Okay, um, the stronger pair out of the Australian dollar and NZD. And we'll have a look at what happened on the NZD and pound because they're obviously poised to be the weaker, right? Because if people are poised to buy for example, in this case, the Australian dollar, um, well, they are literally handing over us, getting rid of their Australian dollars, basically selling them for Australian dollars. They don't want NZD. So therefore they like at the wherever the market's sat at for where they can exchange their NZD for Australian. It's more, you know what I mean? So like anyway, so you'd be doing the same thing, and what do you know? This is even cleaner. So you do the same thing, lower hand. Of course, it's experience, that lower hand thing, higher hand thing. But then you were given a good amount to give. I would probably say about that. It's coming in at around 25, so that's perfect. And then a clean 1 to 5, a 1 to 1.5. There we go. Now, if we just, it probably did work out on the NZD, but it's probably a lot more choppier, because that's supposed to be the least like active pair. Um, but yeah, as you can see, it did still work, but you wouldn't be executing this. Or you would be just you literally go by what the market tells you. Um, so if you go on the Monday, I'm kind of just oh, damn. Yeah. See, look at this. See, like, it's just more chop. Like, so, like, if you bought the pound, look at this, you'd probably be stopped. You see what I mean? So, like, because, like, you would give the appropriate amount to give, and that would be about here, and then you'd be stopped. Why? Because pound is supposed to be the weaker pair, and you can also see that here. You know what I mean? So, um,
Mm.
yeah, so that's the analysis, and then obviously, and so yeah, you literally, but so like you determine the drop down day, etc. with your looms, and you execute your dollar analysis on the stronger or weaker based on if you're buying or selling, in this case, buying the euro, looking to buy the like euro dollar, the pound dollar, the Australian, the NZD, whichever one you choose to buy will be whichever one or the NZD, euro, GBP dictates, right? I don't know what this trade is, by the way, so ignore it. Um, I think actually this trade was because did you remember how you also had a nice bar close on the Wednesday on the 4 day?
Yeah.
I
Yep.
mean, not a nice bar close, just a bar close on the Wednesday. Of course, you had one on the 2 day, and I'm aware of the time.
Yeah.
When it ends, just leave. We'll just leave it at that, of course. But like, yeah. So that was all. So you could have actually traded that day too. Anyway, um, yeah. But I would have just focused on the Monday, to be honest, because you had the weekly, the 2-day, like great. But yeah, so that's it. That's I just wanted to clarify. I guess it wasn't really quick. I'm gonna stop the recording so I can lock the recording in.